morning, all. Ira Epstein of Linn Associates with your morning flash update for this Friday. Whew, what a week. Friday, the 15th of October, 2021, 8:30 a.m. Central Time. And if we take a look, you're within just a few percentage points of all-time highs in some of these stock indices, so pay attention to that. No surprise that gold's giving back $30 and silver 20 cents. They did their job. They got up to a very high number. Now it's time to come back down and check out the support below if the market's going to be able to run. I don't think inflation's been lost on the market, so that'll be the interesting part. Energy markets is up, and what nobody's reporting on is a story here that's really developed. China's going to control what Iran does in the nuclear talks, and you'll say, well, why is that? Because China's in desperate need of oil, and China can turn to them and say, we'll take all your oil. We'll help you with infrastructure. You don't have to deal with the West. You don't think that can happen? You'd be very wrong. They lock in a supply. Fourth largest oil producer in the world. I think it's second largest in natural gas. And obviously they don't have the right money or infrastructure or market to really take advantage of it. But next door, they've got this giant waiting there that doesn't care what the U.S. and the West really says. It does because they want us to trade with them, but they don't because they're going their own way for world dominance. Dollar up a fraction today as most currencies just drifting around right here. In the 10-year note, we're sitting here for a change with the market dropping down, going back into the 1.56, 1.57 level for interest rates. A bounce in the grain markets, but will it have any legs is going to be the big question. And I have been looking to get over the $60,000 range in Bitcoin. You're there. Now let's talk about that. Word is, and I write about it today in my written newsletter for my subscribers, that the SEC this coming week is going to approve ETFs based on futures. That's going to kick the volume in the futures through the roof, because if you're going to have an ETF and you get a lot of demand, then that ETF becomes the big client to buy everything there. It'll help the markets. It'll give them a lot more between the bids and offers. So I think that's a very, very good part. In the news of the day, the New York Empire's manufacturing survey stinks. Anyone that thought this was good, and I was watching John Farrell and Tom Keene on Bloomberg today talk about it, they're going, it's not so bad. Let me make this clear. It stinks. 19.8 versus an expected 26.5 is not okay. It's coming down. Where the market went up was the prices paid. But if you look at everything else, it plain stinks from the new orders. Okay, slowdown. Probably a lot has to do with the supply chain, not that the business demand isn't there. I say that because if you look at retail sales, blowout number. Up 0.7. They were expecting a decline of 0.2. And what about this? Ex-auto sales up 0.8. And then you get over to the revised sales, and they were even a bit better. So the consumers, they're buying. Import-export prices, well, we imported, in terms of price expected, 1/10 less, than expected, but it was still greater than the prior month. And as you can see, in the export, we didn't export very much inflation. University of Michigan comes out with their consumer sentiment index at 9, and then we're going to get the prelim October consumer sentiment index from another source that comes out right after that. So you put this all together. Goldman Sachs came out with earnings that were through the roof. So the banking sector is firing on all the cylinders, be it trading, new loan origination, mortgages that are going out there. Every sector is on fire, but Goldman set a standard. I guarantee they're going to be drunk in those offices tonight because they get paid on bonuses, right? And they're doing their job in a terrible, terrible year. When you look at these markets, a lot of the times during the day, I want to see is the market getting to a sell or resistance point. Now, you look at a chart and you think you have it. You don't. If you use pivot points, which have been around for a long time, and once you learn to master them, you get to see where, in a different way of looking at the market, where the resistance levels might come in. Example, you take a center point. It's called the pivot. Above it, you get 2 sell zones. Now, some Forex traders like to put 4 of those on the market. Then buy zones. I like a 2 in futures. Again, FX people can go further than that. And then I tie with it momentum off my, my favorite, the slow stochastic study. And it gives me an idea for entry or exit. Am I near a zone that I'm not seeing on a regular bar chart, but I might see somewhere else? I've put together a video series. It's 3 parts to the video. I'll walk you through in the first video in a PowerPoint what they are, how they look. Then I'm going to show you everything about them on real charts, and then I'm going to take you to the point as to how you set this up on your own charting software. It's free. All you need to do is go to our website. You'll see our whole new page there as well. And when you're there, go to free offers on the top left, and away you go. I'm Ira Epstein. You have a great day, and I will see you all this weekend as we do our weekly market wrap-ups. Take care.